In this video, we're going to talk about sundial growers. If you're considering about buying sundial growers in your portfolio, then please keep watching this video until the end, because it'll cover many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $1.33 and closed at $1.09. The lowest point at which it fell to was $1.09. And the highest point it rose to was $1.37. Compared to the current price action, its 52-week low was 14 cents, and the 52-week high was $3.96. The current trading volume of sundial growers is 375 million shares, compared to the average volume of 249 million shares. The increase in volume can be explained in the significant price recovery of the share price recently, which broke the downward price trend. This largely explains why the trading volume is almost 125 million shares above the average, and this tendency will hold as long as the price maintains its current trend. Now, let's take a look at the enterprise value of the company, which represents how much the company's assets are worth once the debt is paid off. The enterprise value of sundial growers increased significantly between Q3 and Q4 of 2020, from $206 million to $906 million, and the current value is at $1.31 billion. There is a steady increase in its inherent value, and this is something that investors definitely want to see in a growth stock. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling the equity to keep the ship afloat. With that being said, it should be noted that the number of shares also increased considerably over the period of time, from just above 100 million shares in Q2 of 2020 to 1.8 billion shares, before going down to 1.1 billion shares in the present day. This means that a company may have a tendency to dilute shareholders, but that in the recent period, it may have other options to raise capital, or that it simply has less need to further dilute the shareholders. This is great news for those who want to get in now, because it suggests that there is less risk of seeing a stock depreciation because of further dilution. From a price action perspective, the stock has been recovering from a bottom of around 70 cents, and that encouraged investors to increase their holdings in the stock, as we saw in the trading volume. However, just keep in mind that sundial growers is currently at a very low price point in its history, because it has been around $10 to $15 range in the past. Personally, I think that this is good news because it means that the stock has a great potential and likelihood to increase its value for those of us who want to buy in now. This is why I would recommend to start buying the stock now and to increase the buying pace when it dips. The company may still have a long way to go before recovering to where it has been before, but I think that it'll eventually get there if we give it time. From the price action patterns, once again, we may be able to see a glimpse of whether the stock has enough. From the price actions patterns, I believe that the stock has potentials to go higher. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting massive amounts of capital in companies like Sundial. Following the stock market craze back in 2020, the stock market decided to pull back from the disruptive, innovative, and new stock sector, covering biotech, EV, and anything requiring keynote presentation to attract capital. In the case of Sundial, I think that what also is needed is guts. Investors need to believe that deregulation is going to be the way to go, and depending on to whom you ask, it may or may not be the case. This wave of pullback can be explained in two ways. The market needed niches to park their capital inside to avoid getting losses, and since the stock of some of those companies increased multifold, many of them decided to lock in the profits and didn't mind a massive sell-off. For Sundial, I would say that it wasn't multifold, but the increase during 2020 was still significant. The second reason was because the market began to realize how overly exposed investors have become to the growth stocks. Of course, Sndl is a bit too old to still be considered as a 100% growth stock, and given that it operates in what is essentially retail, let's just say that it's not the company itself that was put in doubt, but more the concept of investing into new and innovative stocks. These are, in my opinion, why the stock ultimately collapsed for many companies that everyone was talking about, including Sndl. In the current circumstances, the recommended approach is to be careful when buying shares. On one hand, the stock may be able to climb back on its own when operations begin to carry the stock price. On the other, the stock may simply increase because it fell low enough. It means that in the current market settings, we need to tread the water carefully regarding when to buy and when to sell. Many of them became overpriced over the past 12 months, and we may need to wait for another few weeks or month before the timing is ripe to increase our holdings. With that being said, there will always be sudden events that will create a lot of volatility for individual companies. With that being said, there will always be sudden events that will create a lot of volatility for individual companies. And this is why it is always recommended to hold a small position in those stocks in case you fear about missing out. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.